Welcome to BQ Prime. I'm at the National Stock Exchange, and with me is Mr. Sriram Krishnan, who is the Chief Business Development Officer. NSE has proposed to extend trading in the index derivatives, especially after a trade between 6 to 9. The proposal is currently with the market regulator, and joining me is Sriram to give us some perspective on that proposal. Sriram, thank you very much for joining us on BQ Prime. My first question to you is that, we've been talking about after hours trading for such a long time now, though the regulator has, in principle, said that between 9 to 11:55 exchanges can extend trading. What is the current proposal that you have proposed to this regulator?
So just to put it in perspective, this is not after hours trading, but an extension of trading hours.
Okay.
And the regulator, like you rightly mentioned, has enabled business hours till 11:55 p.m. for equity derivatives. What we wanted to do was to explore the appetite in the marketplace for this idea. Because from time to time in the past, we have received feedback that it should be an important agenda item for us to pursue. Given that there are global events today which tend to have an impact on India's capital markets. And with that, we began a process of stakeholder consultation sometime in December last year. The consultations have gone on for almost 9 months now with various types of stakeholders, both domestic and foreign investors. And the feedback that has come to us is that we should not look at tinkering with the trading hours for the cash equity segment, but for equity derivatives, particularly index derivatives possibly, we have a starting point. So based on that, we put together a proposal, which is largely coming out of the feedback from the stakeholder discussions. And this is now with SEBI for their approval. And once we have their approval, we will go ahead with a timeline which is acceptable to everybody.
So when you say index derivatives to begin with, which means all the indices which are currently has the derivatives will be there, options and futures both, right? Nifty, Nifty Bank, Nifty IT, Fin Nifty, all four?
Absolutely. That's the idea. So we start with index options and futures and then look at how it goes.
How does the risk management revolve around a new extended trading session, which comes in at 6 in the evening and goes up to 9?
Well, those measures are being worked out and there will be operational guidelines in due course. But the trades which are conducted during these 3 hours between 6 p.m. and 9 p.m. will be considered as part of the next day's volumes. Okay. And therefore, to that effect, things don't get too complicated.
And so my question is that during expiry, we have multiple days of expiry now, which comes in. For Fin Nifty, there's a different expiry. For Nifty, there's a different expiry. For Nifty Bank, there's a different expiry. How does on an expiry day it works? Because my understanding is that currently weekly expiries are happening. So the weekly expiries will continue to happen and the new session will start at 6, is it?
No, the expiry process is independent of what we are trying to do here. The trades that happen between 6 p.m. and 9 p.m., for example, if today were a trading day like that, during these 3 hours, this will be reckoned as part of tomorrow's trades and volumes. And therefore, whatever is applicable timeline for tomorrow's trades automatically applies to the trades conducted between 6 and 9 p.m. today. So that's the simplistic approach we are rolling out.
So my question is, why I'm asking that question is because between the time the expiry today happens and next day's trade happens, there is a lot of settlement happen. Inter-exchange operability also comes into play here. You are confident that within 2.5 hours you will be able to settle the current contracts and then move over the open interest to the next contract, which will come in as part of the next trading day.
So the products that we are initially looking at are all index-based products, and these are all NSE indices.
Yes.
So they are not available as such on any other exchange. Interoperability is about products which are available on multiple trading avenues, right? Okay. And let's say you're an investor, you traded a contract on BSE, another contract on NSE on, let's say the same stock. Then you have the flexibility to settle all of those trades across the venues with the chosen clearing corporation.
Okay.
That's the definition of interoperability. Now, these trades which are conducted on NSE platform, and these are NSE index-based products, anyway would not have a bearing on the other exchange per se. On the clearing corporation, yes, because there could be a client who is trading these products here and who has chosen to settle with the clearing corporation of another exchange. So that possibility exists, but the interoperability framework is very robust and it is now time tested as well.
Because FIs do or FPIs do trade with various clearing corporation and they get netted out or settled at the end of the contract, which happens. And as you said, on a clearing corporation level, it is not homogeneous that all contracts will come to the NSE clearing corporation. It could be at the BSE's clearing corporation and then it could be settled. So this 2.5 hours is enough from a technology point of view, for settling point of view, and from a risk management point of view.
No, the operational modalities will be worked out, and we will obviously work very closely with the other market infrastructure institutions. And if we can roll out T+1 and become the much talked about country in the whole world that has made it possible, and if we are able to talk about further crunching timelines as we go forward, then I think this is also another trick which we should be able to accomplish.
One of the key resistance which used to come in for the last few years was whenever you exchanges used to talk about extended trading sessions, is about back office compliances. You need to have a second shift which that comes in place. Is the stakeholders now on board with with only index coming into play?
See, the operating landscape has totally changed between 2020 and today. And I'm saying this because COVID has brought in a level of technological sophistication that was possibly not existent before that period. In the last 3 years, more and more people have embraced technology. And today, most of the brokers, you'll be surprised, are quite savvy and able to use technology for their benefit, for their growth. And therefore, the appetite seems to have possibly changed in these last 2-3 years. So unlike the olden conversations where pre-COVID, people had a lot of resistance for these ideas. Today, there is a lot of acceptance and understanding that, well, this is an idea whose time has possibly come. And India is now a very important country in the whole world. If you look at the other exchanges, global exchanges, they have 22-hour working windows. And why wouldn't we be left far behind with just 6.5 hours? Right? So that acceptance and maturity seem to have crept in. And while I'm not saying that everybody is in favor of this, but I'm saying that a reasonable majority has certainly, supported the idea, and that's the basis on which we have put together the proposal.
Another thing which has come out several times is that is an index future or index option which is there, but the underlying is the cash market index which is there. But in this case, the cash market index will not be trading at that point in time. So only the index future will be trading at that point in time. How do you manage that kind of change or shift which is there? Because what we have seen in the past is that whenever during a market trading hour, if cash market comes to a halt, the futures and options also comes to a halt because underlying has come to a halt. Now you are saying that from 6 to 9, index derivatives will be play, but cash market will not be in play.
But world over, if you look at what's happening in other exchanges, the cash equities market always comes to a close at some point in time during the day. It's a derivatives market which is open for close to the 24-hour timeline. Right? And therefore, the important point to understand for us is, why is this the case? It is the case because this is an opportunity for the Indian investor to hedge his portfolio risk in case there is a global event or a global development which is likely to have a cascading impact on the Indian capital markets. Today, what happens is the investor is exposed and the gap up or gap down, as the case may be, has to be dealt with the next morning, which is quite a bit of a struggle. And why should the Indian investor be in a disadvantageous position compared to the investors in the rest of the world? So that's the larger context, which is the background to this whole proposal.
Which are the kind of stakeholders that you see participating in in large numbers when you open up 6 to 9? What kind of profile of the stakeholders that you look at there?
See, it's a tricky question to hazard a guess. But my sense is that the younger generation, for example, will like it if trading is available in the evening hours because they are busy during the day and this may be suitable for them. You could also see a movement of some other types of investors from the normal hours to the evening hours. Plus, of course, when there is a global event, like I mentioned, there could be a lot of activity all of a sudden. There are many members who are highly technology oriented. For example, the high frequency traders or prop traders. They could continue trading in the evening hours as well, in addition to whatever they do during the daytime, the typical hours that they trade in. So it's a mixed bag at the moment, and it's difficult to hazard, a guess on what exactly will pan out. But we have to give it some time and let it settle down, and then take stock.
Last 2 years has been great in terms of number of stakeholders or investors who have come into the market, especially in the F&O market, which is there. And while cash market number of active investors have been declining gradually, it's holding steady for the F&O market. Do you expect the same profile of people being active during 6 to 9, and you're betting on them?
Well, I'm not betting on the success of this idea per se. We are trying to deliver what the marketplace wants us to deliver. And honestly, the need of the hour is to build greater awareness among investors, given that we have seen a rise in options trading, for example, which is something we are already working on. So investor awareness and investor education is a core part of our agenda today.
And the regulator is also very cautious in this thing, right? Because the kind of number of investors who have come into F&O market, multiple surveys have been done by the regulator on that how options trading, we're seeing a lot of investors coming in. What kind of risk protection is available for them? Because 6 to 9 is going to be a tricky one because there's no cash market behind them. The second thing is that global volatility or global events are going to dictate it. So, there's high chances of only if you have a good, liquidity coming in from a liquidity pool like a FPI or a foreign fund who wants to take a hedge or a bet for the next day comes in and trades it. So, what is the kind of protection that would be available for this category of investors?
See, we want only learned and educated and aware investors to come into this space. In the derivative space in general. We don't want retail investors who are not aware, who are not fully able to understand the risks in the options trading or futures trading areas, for example, to get into this space at all. And as an exchange, we are also equally concerned about the rise in options trading volumes. The idea behind the evening trading hours is to take one small step towards what the other global exchanges and what the other advanced countries have accomplished already many years back. And in terms of the capital markets ranking, I would think that India is streets ahead today of the other developed exchanges as well, in terms of the ability to deal with such huge volumes and in terms of the sophistication that we have created and the speed of the settlement cycle itself. So there is no reason why we should be left behind in terms of the number of trading hours that we offer. So there are compulsions for us to look at that aspect and to make sure that our genuine investors have a chance to hedge their portfolio risk in case of situations where they are impacted by global events, given how interconnected we are as a globe today.
Is there a glide path that you have given as part of the proposal of whether you may go up extending it to 11:55 at some point in time in the near future? Because let's look at some of the global events like a Fed rate that comes after 9 o'clock. You have Eurozone, macroeconomic policies that come after 9 o'clock. So for an investor who's taking a position between 6 to 9, he may end up holding up an open position and, be subject to volatility the next day morning. So my question is that, is there a glide path which you have given for to extend it to up to 11:55, which is available to you?
No, we haven't published any glide path because we don't have a fixed agenda in mind. We went into the discussions and the consultation process with an open mind to see what the stakeholders have to say. And we are entirely guided by what stakeholders have come back with. And it seems like a majority of the people are happy with 6 to 9. We'll take stock after a few months of going live, and then we'll again go back to the consultation process and see what it produces at that point in time.
Now, NSE starts something and your other exchanges will follow it. The BSE will follow with a sensitive feature of trading between 6 to 9. I'm sure that's going to happen because you see other exchanges also picking up this since you're the leader in taking the first step.
Well, we aren't looking at the other exchanges and market infrastructure institutions and what they are planning to do. We are really focused on our agenda, and as the largest exchange in India, it is our responsibility to deliver what the market wants us to deliver. If the consultation process has produced a direction for us, then I think we have to make that happen. So that's how we are looking at this.
Final question. When do you think this is going to come into effect? Is there a timeline you have when you want to start it? Before this Diwali, are you going to start it?
No. Before this Diwali is very, very, very challenging because market participants will have to be given adequate time to be fully ready.
What is the normal timeline that you normally give to market participants?
So in this kind of a proposal, I would think that at least a couple of months, if not more, would be reasonable.
Okay.
But given that we are almost near the end of the year, and typically in December, a lot of people are away on leave, and also there are shut periods for technology enhancements, etc. So keeping all that in mind, we'll announce a date, and again we will go with all the stakeholders and make sure that everybody is comfortable when we roll this out.
So maybe first thing in 2024, that could be one of the key triggers for you.
We don't know. We will hope to achieve consensus on this, and the more important thing is for us to make this as successful as the T+1 settlement cycle rollout, where it was so seamless. So that was possible because it was done in a calibrated way over a period of time without rushing anybody in. It will be our endeavor to follow a similar approach here as well.
Sriram, it was a pleasure talking to you today on BQ Prime. Thank you very much.
Thank you very much.
Thank you.